So for item 4, here they are saying that Campbell was subletting part of the offices at 100,000 per month. This information was completely omitted from the books. The tenant occupied the place throughout the year, but only paid for 9 months.
Yes.
So what this means is that this is an additional income. And since
Yes.
that was subletting for per month, they're telling us that completely omitted from the book, the tenant occupied the place throughout the year. Throughout the year means that the rent should have been 100 times 12. And then they're telling us that only paid for 9 months. So what we are going to basically do is we are going to recognize this transaction.
Yes.
So what we are going to do, we are going to debit the we're going to debit the payment for the 9 months.
Yes.
With 9 times 100,000, which is 900,000.
Yes.
We shall also debit another receivable, rent receivable, or outstanding rent income, which recognizes the portion that we are yet to receive from our tenant, which will be for 3 months, which is the 300,000. And we shall credit with now the total rent for the period, which is 1.2. Yeah.
So I beg for your pardon, because you say I'm seeing like we have 3 accounts here. We have the cash received, or yes, the cash received. Then we have the rent receivable, which is the income. Then we also have the outstanding rent.
The rent receivable is not an income, it's an asset.
Oh, sorry. It's an asset here.
And then we have the rent income.
So now the rent receivable. Oh, so those are the accounts. We have the rent receivable and then the rent outstanding.
The rent receivable and the rent outstanding are the same. I
thought outstanding is that one that's not paid or due.
In the same way, rent receivable, they say the word receivable is what is yet to be received.
Oh, it's like from the debtors, it's not yet paid, but you're expecting it.
Yes, so that is what I'm saying is, one, we recognize the cash, where we are debiting our cash and bank.
Oh, yes.
With the 9 times 100,000. Then we debit the receivable, what we are yet to receive, because it is an asset to us, which is the 100,000 times 3.
What you're meaning is like we are going to open up a cash account, and then on the debit side of the cash account, we put rent receivable, and then we put that amount. Is it like that?
In our cash account, we shall put what we have received so far.
Yes, as rent receivable.
No, we shall call it rent received. It's basically, it has been received. It's no longer receivable.
Oh, rent received, yes.
Yes, it's no longer received. Then we are going to have another asset of rent receivable, which is the 300,000.
Oh.
First is the 900,000, which goes to our cash. The 900,000 is going to our cash.
Yes.
The 300,000 is going to our rent receivable account. Those are the debit sides. Debit bank.
Yes.
And debit the rent receivable. And then now credit the rent income with the total amount.
Oh, you said we debit the rent. We debit the rent receivable by the cash of 300.
Okay, let me do this. So you debit. You debit your cash. Bank with the 900,000. Then you debit rent receivable with the 300,000. Then you credit rent income with the 1.2. So this is what I'm talking about.
Okay.
This goes to the profit and loss as an income, additional income.
Okay.
Additional income.
Income.
This goes to our balance
Asset.
sheet as a current
asset.
This you draw an account, the cash account for it, and adjust it, and adjust your cash and bank by debiting it in your cash and bank. That is all that we do.
Oh, that's okay.
Okay. So there are 3 accounts, but we are saying that this income we are recognizing of 1.2 is distributed in 2 ways. Part one of it has been received, and one of it is yet to be received. Completed our double entry. And that is it. Any question?
No.
Okay. All right. So that is for this. Now let's just look at.
Maybe first put a stop there. There is something that back to that working you've done. Yes. That, I thought, to me, at some point I thought this rent. Anyway, it's okay. I was confusing it with I thought it's the question that I wanted to ask was maybe we're in the position of renting it out, but then as in we renting as the business Kembo Limited, but I realized it's Kembo Limited renting it out, so it's okay. My question doesn't qualify here.
Yes, so that is why I say that sometimes the examiner, when you look at the question, the examiner up here, we had the word rent here. But this is, because it was on the debit side, this is rent expense.
Yes.
And then we are getting now information here due to around rent. This is an income that should be treated as an income separate. It's not related at all to the other rent up. Yes. Okay.
Okay. By the way, out of experience, I would love to also ask you, out of your experience, for such a paper, how much time am I supposed to allocate each number on average? Because as I'm also doing this number, I need to put that under consideration.
30 minutes. Why? Oh. Why? Because you have 5 questions. And you have 3 hours. The only time you use the 15 minutes are for revision. Basically for reading through. Now the 3 hours is 3 times 60 is 180.
Okay.
So when you divide 180 divide by 5. What do you get? 45?
It's 36.
36. So I usually tell my students, attempt the question in 30 minutes. That should be your target. So that the 6 minutes times 5.
Times 5, 30 minutes.
Is used for come and go.
Confirmation.
So
Okay,
that should be your
that's
target.
okay.
And actually, if you go past the 30 minutes, believe me, you'll never finish. And you can actually be able to practice that. So that by the time of the exam, you've actually mastered that kind of speed. It's possible.
Yes, that's what I want.
Especially,
that's what I want.
That's what you wanted. But I'm also adding that, especially when you know what you're doing.
Yes.
You're not, because thinking takes a lot of time. But if you get to something and you know exactly what to do, and you've practiced, because the hand also gets practice. Like, it's just like a marathon. You cannot go for a marathon when you've not been running. So what happens is you should be able to, you need to be able to know that at least my hand has also practiced. Yes.
Okay. So we can go to number 5.
Okay, number 5, they're telling us that management resolved to provide for doubtful debts at 2% of the trade receivables. Another 1.5 of the trade receivables were written off as bad. However, this information was not included in our books of accounts. So like earlier said, doubtful debts affect our receivables.
Yes.
So if we have our receivables to the tune of 46,750, they are trying to tell us that these receivables have an aspect of doubtful debts. So what I'm going to basically do is just try to, let me come here. So my trade receivables are this. The examiner is telling me that part of my trade receivables, they provide doubtful debts at 2%. And they're also telling me that there is also a 1.5 that was written off. Now, this is the rule. If at all we have receivables that have been written off, those are the ones that we first remove. Why? You cannot provide for receivables that have been written off. When we say provide for doubtful debts, means that we have certain debtors or receivables that we are not sure we will receive. And so we make a provision. Provision is like we set aside part of our profits to cater for that loss in case it happens. But in case they are telling us that another 1.5 was written off, we only provide for the balance after writing off. So it means that the first thing I'll do is I'll just pick the written off and I'll first come and write them off. So they are writing off 1.5, 1,500. These amounts are in thousands. It's very important to include a degree of precision in your workings as well, or you can actually use the full figures, 1, 2, 3, and 1, 2, 3, like that.
Yes.
So what this means is that the trade receivables available.
Yes.
Like after writing off, Okay, just a moment.